everyone. Good day, friends. All right, so you're welcome to tonight's episode. Just a quick review of our chart. So I'm on volatility 75. Just a quick one. Then we are out of here. So we are on the 4-hour time frame. So basically, we as I had already said, I am saying that we are in a bullish market, and then per my expectations, we are actually in a bullish market. So this is what I am seeing and hoping price does on the chart for us. Okay, so basically we are in a bullish market, and as I said last week, we're in a bullish market, and this week too, I don't expect anything much than we having some bullish days. All right, so the weekends actually traded bearish. Yeah, that's Saturday and Sunday candle. You know, and the reason why they traded bearish is that they had something to do. Okay, I'll explain that later. Let me take my time, and then let's go through one after the other. So look at this chart. This is volatility 75, and what can you basically see here? Actually, when price got here, it made some push up. This is where the institutional orders, I believe, came into the market strong. Okay, so this is where they began their buying. The big banks and began hedging their funds here. So price actually traded down, and then it begins to push up against all these fake moves here. All right, so these are fake moves after the big banks decided to make place all their buy entries around this area. So for banks to rather be in profit, they have to trade above this area. So I'm expecting the market to trade above this area. Yeah, I'm expecting price to trade above this area. All right, so now let's look at one thing that is happening. Let's go down to our daily time frame. We could see Sunday and Saturday traded bearish. Saturday and Sunday traded bearish, and then what happened? There were some equal lows here that price had to raid and then continue rallying back up. Now I've seen a very nice pattern on. So let me quickly go through this. I had actually placed a trade on the 4-hour time frame when price actually got here. When price got here and traded back up, I had placed a buy, a pending order here. I think it was here. So price didn't trigger the trade. It came all the way to this point. Price came all the way to this point and couldn't trigger my trade, and it traded back up. I was just looking for this short move up here, just to even run on this this void here. Okay, I wanted to just trade it and just take some pips, so I placed a buy limit here. All right, I placed a buy limit here, and it didn't trigger because price didn't get to my entry point, and then it rallied back up. Yes, so if I was really considering this as an order block, it didn't even touch it, and then it rallied back up, and then I came to this point, and then I saw the reversal again. So actually what happened is this: we're looking at a bullish market. Let's look at it on a weekly basis. From this week, from the previous 2 weeks, price had traded from a low, and it came down, it came up all the way to this point, close around this area. So what happened this week? The previous week, that's last week, price traded and then consolidated around this area, and then broke up here, and then it traded this way, and then so on the normal, whatever you see on the chart speaks volume. As the price traded and went within the week, it left a trace that needed to be traded into, and this was what I was expecting. This there is this gap here that I was expecting price to actually um trade into. Let me change the color so that we have a more visible. So I actually expected price to trade into this area, come and fill in this area, and then see our way forward. Okay, and price did that. um how do we call it? Price did that yesterday. Okay, yes. So on the 4 hour time frame, the weekly time frame, that's within the new week we began there, it closed in on that small fair value gap we had below here, and had actually taken down all the lows here. So someone sent me a message and said he feels that the market had broken a structure, and that he sees that the market is going to sell and reverse. So I don't see a reversal here. What actually happened is that these are all short-term lows. Okay, when you see consolidation, I saw that these areas were all short-term lows. Okay, which was part of the big move up here. All right, so this move, this move all the way here, this consolidation is part of this big move. So all these lows here are just short-term lows, including this. I see them as short-term lows. Okay, so what I'm actually seeing price doing is so simple. So pride had to create short-term lows and take down all those lows to just stem the market to gear up. Okay, so now we are on a 4 hour time frame. My mentor Michael, ICT, he teaches something on breakers. Okay, breakers, how breakers are formed. On a short time frame, when we have a bearish, we want to have a bullish breaker. It's actually formed when we have short-term lows which is being raided, and then price begins to continue trading up. Okay, so with the breaker, for instance, if we have this market moving up towards this direction, okay, we have something like this. So let me take my time. I'm trying to explain what I see the market doing now. Okay, I see the market unfolding, and it is about to form something that may give us a premise for an entry. Okay, and the market straight down this way. Okay, if we have a setup like this, and then it trades up back this way. Okay, and then it trades down this way. Okay, when it trades down this way, what has market done? Market has taken down the short-term lows we have here. All right, market has taken down the short-term lows we have here. Now what's the next move? Market tries to come back after it has taken the short-term lows. I hope you are following. So market tries to signal a short-term lows, it trades back into this area. Okay, let me use this. So market trades back into this area, and it gets bounced off. Okay, it gets bounced off slightly, but it doesn't go below, it doesn't trade below this point. Okay, now what is the next move? I'm expecting markets to continue shift up, break above this point. Immediately market breaks above this level, we have our breaker formed. Immediately price breaks above this level. Okay, this is where we have our breaker formed, and this is where we have breakers formed. When the breaker is formed here, what I would necessarily expect is, so we have what we call a breaker. Okay, let me highlight the different color. So we have what we call the breaker. So when we get the breaker formed this way, the next expectation is that price should trade back into our breaker. Okay, now what constitutes the breaker? The breaker is made out of this bullish candle here. Okay, this bullish candle here is what constitutes our breaker. Okay, so if price actually trades to this into this breaker, even let's say the mean threshold of this breaker, let me try and get you to the mean of the breaker. Even if price trades into the mean of this breaker, you can place your entry here. And then what's the next move? The next move is we are expected price to rally back up higher. Okay, if it doesn't trade and it even gets into this point, depending on your depending on your lot size and your account size, you should know what your account can hold and all that. If you are putting a 0.001 and you want to place your stop loss below this particular breaker, which should be somewhere $20, you should have a bigger account size to be able to do that. So you want to really enter the trade at a very good point. All right. Okay, so basically this is my expectation. So I'm hoping that this, when the market forms this, or when the market gets to this point, this is our usual expectation. This is what we are expecting the market to do. But so this is an expectation that the market should arrive at. Okay, so for those of my friends who are actually asking me, should I sell, should I buy, now I have given you a way forward. So just wait. When the market is ripe, you enter a trade. You don't just jump into the market, please. All right, so let's patiently wait till everything unfolds. All right, if everything unfolds perfectly, you can make an entry. All right, so for instance, even with this particular candle, even if you want to quickly enter below here and hope that price goes up, you can make an entry. If we have a retracement back into this level, you can make an entry here, put your stop loss below this point. All right, expecting that, okay, when price comes, reverses and closes in on this candle, I'll put my entry here and put my stop loss here. I'll put my entry here and put my stop loss below the last bearish candle here. Okay, so this is my premise for volatility 75, and I hope that it unfolds this way so that we see a way forward. All right, so this is a more concise video and a clear cut picture to show you the way forward. All right, so guys, I hope you do enjoy the video, and then if you want me to add you to my WhatsApp group, I have a Telegram group, I share signals and all. But if you want me to add you to a closed group, is a WhatsApp group, you have to put your comment in the comment section. Ensure you subscribe before, and then you like as well. Right, share the videos for other people to also enjoy, and then I hope that you will learn something soon. All right, and then you'll get acquainted with all the strategies that I'm trying to share with you. These are not my strategies, these are strategies that I've learned from my mentor. Okay, and they really work. Yeah, they really work. My mentor, he's so kind. He's called Michael, popularly known as ICT. All right, so I give him all the credit, and I want to also encourage you to keep on studying. Take your time and read the chart well. Take your time. I mean, it will take you a long time to really master the chart. People have blown account and account and account over different several accounts. Okay, so don't also be in haste to blow more accounts. All right, so guys, I wish you all the best, and then see you. Let's hope that market unfold this way. If market doesn't unfold this way, I'll give you the way forward. All right, so wishing you all the best. This is a short video, and then okay, let me see if I have something to present to you on volatility 25 as well. Okay, so this will be a quick one. Yeah. Okay, so what can we see on volatility 25 as well? So as I told you the last time, you could see that there was a fair value gap here. That market has closed in on the fair value gap, just on a daily time frame. Okay, and then the market is closed in after it's closing on the fair value gap. Where is it headed towards? It's headed towards the skies. All right. Okay, so there was a short-term low that has been raided. Okay, market had raided the short-term low, and then here it goes. When you look at the weekly time frame, you could see that the gap was even more bigger. Okay, yeah, the gap was more wider than we saw. Price had actually dipped into the gap and then it's trading back up. All right, there was a short-term low here that the market had to actually take down. Okay, so the market has taken down the short-term lows and then it's trading back up. All right, the last time we knew that there was a break in structure here. So after market has retraced back into this area, the normal expectation is for price to go back up. All right, so let's say if I pull my fib from the lowest point here, if I pull my fib from the lowest point here to this point, what will be my first target? Okay, what will be my first target? So probably my first target should be here. Okay, you scale off on the 100 and then your next expectation should be on the 161.8, which basically I don't even have to go that far. I just have to look at the mean of this, so I can scale off here too as well. And then if price comes this direction, you're able to scale off to on this area. You don't have to always be waiting to be scaling off at a higher point. What is the probability that price may not even go to that point? Okay, depending on, so this is a longer picture. So now with a longer picture, it helps you break the chart down to quickly suit your entries. Like for instance, today you can see that we had a bullish day. Let's go down to them. um let's go down to the weekly. Okay, so on the weekly we had a market coming down all the way, trading down this point into the um fair value gap, and then price is actually trading off it. Okay, but on the 4 hour time frame we could see that price has left some traces of gaps that it need to fill. That for instance, this avoid, okay, this is a void. The price could easily come back to refill before it has to do whatever it has to do. All right, so look at the 1 hour time frame. You could see that price had just the on as today as a whole, what price did was that it actually had to trade below this equal lows here, this point and this point. Price traded below them, took down the lows, and then quickly rallied back up, formed a nice other block here, and then price traded up into the sky and has taken the highs. So actually price had to take rid of all these lows here and then come and take the high to of that was yesterday and 2 days ago. Okay, so look at where price actually bounced off. Okay, take a good look at it. It's into an order block on the 1 hour time frame. Okay, for instance, if you had entered a trade somewhere here, it wouldn't have been bad. Why? Because this particular candle here, this particular order block here, actually price reversed at the mean threshold of this order block. I had told you also that when it comes to the wicks, sometimes don't pay too much attention to the wicks. Okay, so in as much as you even saw that price had wicked and reversed at this point, it would have been a good entry. Let's boil it down to 30 minutes and see if we could have found an entry. So on the 30 minutes time frame too, you could see that this is what price was trying to do. It created this one and then rather went back to trade, take down the lows below this. Let's go down to the 15 minutes time frame. I know we'll find a more refined. Very good. Here we have the setup that recently I just taught on my video, um, which talks about how market will accumulate, how market will manipulate, and how market will distribute. So here there was an accumulation, manipulation, and here there was a redistribution. So price actually traded, came back into this order block here quickly, nicely, so nicely. You see here price had closed in on the gap here, traded up above this, and came to this point and reversed, and then nicely into this order block. And where do we head? We head towards the sky. See, and when price had closed above this, it reversed and came down to this point. It came down to this point, and then what did it do? It continued rallying back up. There's something that I've seen here that I'll talk about later, to also make you enter good entries, especially when you see structures being broken. Okay, right. So guys, that's it for today. Um, should I refine? Okay, refine further to 5 minute time frame. All right. Okay, so you could see it's the same thing that had happened here. It just traded back. This is a continuous order block. Okay, this is a continuous from here to here is a continuous order block. So wherever your entry would have been, I mean, on the 15 minute gave a clearer picture. All right. So wish you all the best and then the best of trading. I hope to see you in my next video. All right. And if you have any question, kindly put in the comment section, and then stay tuned.